Well, it's all about individual stocks, and that's what's driving the market. So let's bring it down to the top 10 list that you need to watch out for today. Our team is standing by with exactly that. Guys, good morning to all of you. And topping the charts is going to be what else but Vodafone Idea along with Indus Towers, because finally we have those big announcements from the board meet yesterday. Nisha, tell us more.
That's right. It's a large fundraise exercise that the board of Vodafone Idea has really approved, worth 20,000 crore rupees. And that will also give them the ability to raise more debt. So in total, they are looking at about 45,000 through debt and equity, as well as the promoter entities are likely to participate, is what they have stated. And the EGM for getting the shareholders' approval is on April 2nd. They aim to complete this particular process by the first quarter of FY25 is what is stated, and the money is required for network expansion, more coverage for 4G and 5G rollout. Here I will add one more point, is that they have government dues on account of AGR as well as spectrum liabilities. So it will give them more amount of money to and ability to repay that debt. Now, most of the brokerages have said that it is a more definitive plan, even though it's an enabling resolution of raising equity funding like they had done in September 2020, but could not bring in external investors. So some of the brokerages are skeptical and would be watching out for it. One more aspect which is going to be important is that the market as well as the analysts do state that while this fundraising is going to cause a turnaround in the company's prospects, but a tariff hike in the telecom sector is very much required. Of course, a direct beneficiary of the fundraising exercise of Vodafone Idea is going to be Indus, and it will manage to get the outstanding dues from Vodafone Idea, and it has also reduced exposure to Vodafone Idea, so an upside to that cannot be ruled out as well.
Okay, all right. Thanks a lot for that, Nisha. Well, I'm tracking Vedanta. They had an analyst meet yesterday, and the team has, pressed all the right buttons and spoken all the right things. Let's see if they deliver. That's going to be important. But for the time being, I'll read this positively. The few big highlights that they said, management says that they have a potential to deliver $7.5 billion of EBITDA annually because of the expansions that are underway. They also highlighted that the expansion of the aluminium and the zinc assets, which were underway, that will be completed in FY25 and they'll start contributing. Nuvama, in their note, they say that both these two assets can contribute in addition $1 billion of cash flow. So we'll see how that goes. On debt, they said that they're going to be reducing debt at the parent, that's Vedanta Resources, by $3 billion by 2027. And they have stated various ways they can do that. There's a brand fee in there that they can do it. Could be possibility of some dividend payout as well. And they're saying that more or less, they believe that this is very doable. The important point is, forget about what's happening at Vedanta Resources. For the listed entity, they said no further debt will come on its books, which is positive. And one step in the right direction will be the monetization of the steel assets. Earlier, they were talking about Q4 FY24. Now they're talking about Q1 FY25. So we'll have to track that. And finally, in FY25, we'll have many more listed entities from the Vedanta group. So that could be a value unlocking exercise as well. Expect the stock to open up in the green.
Okay, so making all the right noises.
Making the right noises. Now, delivery is important. Delivery is very, very important. And, let's see if they can keep up to this.
Deliver on the promises.
The problem at the parent level seems to be going away. And that, in turn, could result in a little better valuation for it. For currently, it trades at less than 4 times EV per EBITDA.
I think I've seen a few upgrades.
Yes, we'll do that at around 9 a.m. today.
Absolutely. So. But I mean, the price target doesn't move that much, 10, 20, 15 rupees. But more on that a little later. Now, Bharti is the other one in focus. We spoke about Vodafone Idea, but Hormuz has got more on Bharti. Hormuz, take it away.
Well, Sunil Bharti Mittal spoke to Mint at the Mobile World Congress, and he's delivered some positive commentary coming in there as well. And he's seeing this trend among companies where they are trying to focus on their core businesses now, and that's what Sunil Bharti Mittal has said as well. And he mentioned that they plan to exit the non-core businesses like insurance, food, skilling that have failed to scale up and concentrate on their core business. What is their priority now? The priority is to transform Airtel into a digital entity, the focus on its Africa operations, which has a significant contribution to its EBITDA, and focus on the payments bank as well. And he's also mentioned that another area of priority will be the focus on OneWeb Satellites broadband venture. So that those are the area of focuses. And he's also spoken about the enterprise vertical in that interview, and he's mentioned that the potential value of the enterprise segment is close to $10 billion. And he also spoke of competition coming in from Elon Musk and Starlink, and he's called Starlink a formidable competition, and as a result he sought immediate spectrum allocation for the same. same. So positive commentary coming in from Sunil Bharti Mittal there. Expect the stock to open in mildly in the green.
Okay, got that. Hormaz will watch out for Bharti as well. Let's move on to a couple of the stocks beyond the Nifty, which Vivek is watching out for. Torrent Power and Salasar Techno. Vivek, why are you looking at these?
Well, good morning. Some news flow coming in both of these names. So first we look at Torrent Power. What's happened is that the company has got the letter of intent. The company has won a bid under the tariff-based cooperative bidding process. This particular bid has been won from PFC Consultant. This set up a transmission system in the state of Maharashtra. Now, what are the details? The annual transmission charge of close to 50 crore. Apart from that, 24 months is when they'll start operations. And this particular timeline is for a period of 35 years. So positive development as far as Torrent Power is concerned. The second stock is Salasar Techno. The stock's been quite volatile. The company has received an order worth 200 crore. Now, this is from an entity known as Zetwork. The company would be supplying close to 25,000 metric ton of solar structures, which then the buying entity will subsequently export. So some positive news flow coming in for Salasar as well.
All right. Vivek, thank you very much for that. Well, Abhishek is now with us with sort of news and updates on Capital SFB and the CMS info, where there was, of course, that clean out block which happened. Abhishek, take it away.
Well, to begin with Capital SFB, they have reported their Q3 FY24 numbers, and numbers are on the weaker side. If you take a look at the asset quality as well as the AUM book. So to begin with asset quality, gross NPA in value-wise is up 6% quarter-on-quarter. As a ratio, it's up 24 basis point on a sequential basis. Deposit momentum is strong, up about 11.5% YOY and about close to 7% sequentially. However, the AUM has dipped, and that is a surprising factor given the fact that all the lenders have seen their loan book growth this quarter. So the AUM growth is a decline of 2.5% on a sequential basis, while it has grown by 12.4% on a YOY basis. In terms of net interest income, it's grown at 3.5% sequentially. This is due to the fact that they have been able to control their cost of funds and improve their yield in this quarter. So their AUM has actually declined by 2.5%, but their interest income is up 3.5%. So that's also aided the NII. And the PAT is aided by the fact that, there is a decline in provisions and robust growth in other income as well. So PAT growth is nearly 19% on a sequential basis. Coming on to CMS info, there was a block deal as we had reported that the promoter entity or SAN Investment Holding will be selling their entire stake of 26.7%. Some of the key, participants in this block deal were Society General, AIG Global Investment, Morgan Stanley Asia, Singapore PTE, ICICI Pru MF, Abu Dhabi Investment Authority, Kotak Mutual Fund as well as Nomura. So ICICI Pru MF and Kotak Mutual Fund have bought around 2.5-3% stake in the company each. Back to you.
All right. Abhishek, thank you very much for that. We got a few other things. There is Texmaco Rail and GET&D. Mangalam is here with details on both. Mangalam.
Well, both of them in focus on account of specific news pieces. For Texmaco Rail, the board has approved fundraising via pref issue of warrants to the tune of close to around 150 crores, though we don't know the details of the price at which the warrants have been issued, to whom, etc. But this should be directionally a positive. And GET&D, they've won an order worth nearly 370 crores from Power Grid for 765 kilowatt shunt reactors. These will, of course, be delivered in FY26. So that is when the company perhaps will recognize its revenue. So 370 crore order win coming in for GET&D. That could also be in the green today.
All right, Mangalam, thanks for that. Let's do a quick recap of all the top stocks we discussed for you. Stocks with positive news flow: Vodafone Idea, Indus, Vedanta, Bharti, Airtel, Torrent Power, Salasar Techno, CMS Info, Texmaco Rail, and GET&D. While the only stock that's reacting to negative news flow is Capital Small Finance Bank. So those are all the top 10 stocks that we're looking at. But for the time being, let's turn our attention to the commodity markets. Manisha Gupta joins us as always to tell us what's going on there. Morning, Manisha.
Morning, Nigel. Thank you for that. I'm looking at the crude oil prices, which have extended gains for a third straight day and trading above $83 a barrel. There is still uncertainty over a possible Gaza ceasefire, while the conversations have continued for most part of last week. Also, the strong U.S. physical market demand seems to be supportive. The markets are watching out for the Houthis continuing to disrupt shipping in Red Sea, which has led to rise in freight rates and shipping times as well. Apart from that, the important news is that Russia has announced a 6-month ban on gasoline gasoline exports, and this is from 1st of March. The impact of this is something that we'll see in coming months. Apart from that, it also is about the OPEC and allies meeting, which is in the month of March, and that is in focus because this is what will tell us on how the next quarter is going to be. The expectations are that the OPEC and allies will extend the production output cuts that they did put out from Jan to March, and you could see them being repeated from April to June as well, and that is supportive.
Okay, Manisha, thanks very much. We'll come back to you for more a little later here on the program. Thanks very much. We'll take a quick commercial break here. Up next, we'll connect with Deven Choksi of DR Choksi FinServ for some fundamental stock analysis. That's coming up in just a bit.